Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, I've got another video for you, and today we'll be talking about how to trade fake outs. Now, there's a few ways in which I look to trade fake outs myself, but in today's video, we'll be focused on a particular pattern which I've mentioned a few times in my stream. So if you're a regular, you may already see the pattern. But in today's video, we're going to go through the basics, through the theory, see how the pattern looks, and then we're going to focus on some real life examples: one in pound yen, one in pound USD, and the third one on AUD CAD, just so you guys can see how it works in the real life markets. Then you guys can go and experiment and back test yourself and learn more about the pattern. But today, I want to focus on the theory, why it works, how we can use it in our trading, also how to use it best. And then we're going to take a look at some nice examples on 3 currency pairs. And as you can see, the background has changed a little bit. I'm actually currently away in Rwanda, so it's not the usual setup, but again, still getting out the content for you guys. So hope you guys do find it enjoyable and useful. If you are enjoying the content in the channel, please be sure to like and subscribe and hit the bell whilst you're at it as well, so don't miss out any streams or uploads in the future. But without further ado, let's get into the video. Okay, right guys, so on the screen, as you can see, we've got the patterns here. So on the left, we've got the bearish version, and on the right, we've got the bullish version. So it's the same pattern, but on the left is just the bearish one, and on the right is the bullish one. Now, before we go into the theory of the pattern and before we talk more about it, first we'll get on the same page of what a fake out is. And essentially, a fake out is when the market fakes to go one way to go the other. In simple terms, there's going to be liquidity above each high and each low in the market, and price will either run the highs, run the lows, grab liquidity to fund the move to go in the opposite direction. That's all we need to know, really, in simple terms. And the pattern that we're looking at now is based on that. In the bearish structure here, we've got lower lows and lower highs, so naturally we're always going to look to sell the market, or at least I am, according to my trading plan. I'm looking to be selling this market here. But I can wait for high probability opportunities based on confluence and based on fake outs liquidity. And typically, when we see this pattern form, we have a first retracement and price will consolidate, form some highs, and this is where people get into the trade a little bit too early, and then we'll see a move into a good area of confluence. Again, I do have videos talking about how to trade with confluences and the confluences I use, so I will leave a link in the description to that video. But essentially, all looking for price is to come to a strong area of confluence, but fake out some highs or fake out some lows first. Now, again, it's not going to be perfect. Sometimes you'll be wrong. That's why we have stop losses. But it's a very, very powerful pattern when you wait and you're patient and you wait for price to either run some highs or run some lows into a strong area of confluence. So not just run any high or run any low just because you feel like liquidity is taken for the market to go in the opposite direction. The market could just be looking to reverse. So we have to be focused on the areas of confluence, which is why I mapped out this blue zone and that blue zone there. This represents area of confluence. The market has run to an area of confluence, taken out highs along the way, and now we're using that to fund that move to the downside. And that's the exact same with the bullish example here. We've got higher highs and higher lows, as we can see. The market then has its retracement. People getting a little bit into the market too early, anticipating the market to continue. We have one more down move coming to a stronger area of confluence, whether you're looking at fibs, support and resistance, supply and demand, moving averages, pivot points, whatever you're looking at in terms of your confluence. Like I said, I've got a video about that in the description below. But that's where our confluence comes in. So I've already mapped out this level. This level's already mapped out. We're not getting lucky that the market's coming here. We've already mapped out this this area in advance. So there is a likelihood the price fakes out but doesn't quite reach the level and then continues without us. That's perfectly fine. We're not here to catch every single trade. But all we need to do is map out key areas, and then we need to see if price can consolidate before that, and if it does, then we can look to see if the market can grab liquidity underneath those lows, test our area, and then we get the continuation to the upside. So these are the areas we want us to get into. And again, the fundamental reason by why we're looking to sell here and buy there is because we're waiting for deep retracement to strong areas of confluences and waiting for price to fake out some highs or fake out some lows along the way, depending for bearish or bullish. So hopefully that made sense to you guys about the pattern. We're looking at price consolidating but within structure. So consolidating within bearish structure or consolidating within bullish structure, running the high, running to the low into an area of confluence. That's the key thing. You don't just take the trade because you feel like price has had a fake out now. No, anticipating a fake out, but we need to anticipate it for good reason, that we're coming to a good area where we could look to flip bearish and could look to flip bullish. So hopefully that made sense to you guys. We're going to take a look at some real life examples, which if it hasn't already should definitely things up. We'll start with pound yen, and then we'll work our way through pound USD and AUD CAD. Okay guys, so welcome to pound yen. So this pattern actually happened fairly recently on pound yen. Actually, I was looking at this trade, but I actually missed it, unfortunately, because again, I am away, so I'm not really focusing on the charts right now, but it fits the pattern, you know, to a T. And actually inspired this video, to be fair. So as you can see, we've got a really nice bearish structure here. The market's making lower lows and lower highs. So we've got the original high there. We've broken through this bearish trend, and the market starts creating this bearish structure. So naturally, we're looking to sell the market. And I remember coming into the week, I was looking for some sell opportunities. Originally, I was talking about this level here. The market was consolidating around this area, and then when I saw price, you know, kept failing to push lower, I then said I'm backing away from this level, and now I'm looking for my second area, which was this consolidation up here. Kind of supply area. This is where price consolidated briefly before we had all that momentum there to the downside. So these were my two areas of interest. The first area, the market was kind of just reacting with it and not looking to take out the lows. It was just moving sideways, seeing, you know, smaller reactions. So that was a big red flag, because if the market was going to continue bearish from this level, it would have done it on this move. The fact they rejected again for a third time and came back up is not a good sign for the sellers. So immediately when price has done that, you know, I'm looking for price to come to my second area, which is this area here at 163. We see the market fake these highs. This is where we get in the fake out, fake the highs, and this is where we're looking for our entry. This has got good confluence there. We've got a good supply level. We've got a good fib confluence going through the market. And also we do have a really nice trend line as well running through the market there as well, connecting these highs. Let me change the color of that. As you can see, one high, second high, and the third high there as well. So we've got really, really good confluence at this area, rejecting the 0.786. So again, looking for your entries. Again, I've got videos on entries, so make sure you go and check that out. It's under my Forex education playlist. But this is where you're going to look for your entries. Doesn't really matter how you're looking to enter. I use candlestick patterns to enter. This is where you want to be looking for your entries, and again, capitalizing on the next move to the downside. So you can see prices run these highs here. These are weaker highs into the more important supply area, which is where we got our confluence, you know, where we're looking to look for our entries, and this is how we can take advantage of that pattern there. So again, it's very, very simple looking at the bearish structure, and you can see, you know, this is when price is quite bullish. This is where people are thinking, okay, is the trend actually going to reverse it? So this is where the most kind of uncertainty is. The market's close to going bullish. You know, this is where you want to be looking for your sells. Again, there needs to be confluence there. It's not just because price is quite bullish and it's taking out some highs. So again, anticipating the fake out, running to an important area, and then we get the follow through to the downside. Now we're going to take a look at opportunity in pound USD, which I actually took a trade on a few weeks ago. This move here. So again, we got price, you know, bearish structure. We have the consolidation, broke to the downside, really good momentum. And we got this low here. We got a lovely lower high, and then we've got another lower low. And now again, all we're looking for is a lower high to form for another move to the downside, which ended up being this high here. So you can see the market again push to the upside. We've got some people looking to sell the market a little bit early. The market's kind of sort of holding onto that support level term resistance, not really going anywhere. Big wick to the downside, so the market did try to roll over, but then just closed very, very bullish to the upside. I think that was probably some news. But again, this is price grabbing liquidity above the highs, because a lot of people would have been looking to sell pound USD. Really nice, you know, impulse to the downside. We've seen a good, healthy correction. Now we're looking for price to continue. Very, very simple. And again, that's what I was looking to happen for pound USD as well. But again, we've got a lot more confluence here. Price again testing a nice little fib level there as well. You know, coming to a more key area here on the higher time frames, or 4H at least. On the hourly, it looks like a good level of support there as well. You know, rejecting that 0.618. So we've got a lot more confluence at this level, and we do selling at these prices down here. So again, the market takes liquidity above these highs here, has the fake out those levels, and then we see the market continue south to the downside. Eventually came back to retest the same area before looking to continue down to the downside. But essentially, all we're looking at is the market running the highs first, and then seeing the follow through. And again, our final example on AUD CAD, very, very similar to that one as well. You can see we have some nice bearish structure here. The market's moving to the downside. We've got high, low, high, low, high, low, high, low. And again, you can see here, the market was looking like it's going to create another lower high. All it did was come back and respect the same low, and then a big strong move to the upside, all this momentum. So again, a lot of uncertainty, a lot of doubt here. You know, people thinking, okay, we tried to form a lower high over here, it failed, and now we're seeing big bullish momentum to the upside. Are we looking to reverse? And that typically that uncertainty there is that where you want to be looking to place your trades with some good confluence. Here we had a really nice trend line the market was creating with these lower highs here, 1, 2, and 3, 1, 2, and 3, and we had a really nice fib level going through the market here as well, coming into the 0.618 and almost into the 0.786 there as well. So this is where you want to be looking to place your trades in that consolidation. And then when we get the rejection on the lower time frames, looking for your entry confirmations, this is where you want to be taking your trades. And then we've got the liquidity, the fake out essentially above the high there as well. And again, this pattern happens numerous times throughout all the time frames. You guys can go and experiment and check it out yourself. But this is where you'll be finding your entries higher up. Typically you want to be looking for bigger retracements because the market, especially in FX, only trends about 30% of the time, and most of the time it's in consolidation. So typically you want to be looking to sell high and buy low. And the same in bearish structure, not just in consolidation. In bearish and bullish structure, you're waiting for bigger pullbacks, normally better risk reward, and normally just better positions in general. A lot of people, a lot of impatience getting into the trades a lot too early, and then using that liquidity to fund the move to the downside or to the upside in the bullish examples. So hopefully that made sense, guys. Again, take what you learn here, go and test it out in the markets, go and back test it, see if you can understand the pattern clearly. And again, this pattern can be used in different ways as well. All we're looking at is price faking out some highs or some lows to fund the move in the opposite direction. And that's it in simple terms, and it happens almost everywhere. You can see here the market's created some highs here, fakes to the upside, and then we get a big move to the downside. So again, it happens all the time, but the key thing is that the market's coming to an important area. It's not like, okay, the high is taken out, then we drop. Where we come into a strong level of support, term resistance, there's probably some more confluence there. If I whip the fib out from the high to the low, you can see we come past into 0.618, almost 0.786. So there's good confluence there, and that's just a random high that I just looked at here on the video. So going through the market, you'll find a lot of evidence happening, and it could be something that you start to incorporate in your trading if you haven't done already. But yeah, guys, that is it for the video. I hope you found it useful. If you have, drop me a comment down below. Any particular videos you want to see in the future as well, drop a comment down below. I'll be happy to add it to the list. But again, thank you guys so much for watching the video. Drop a like if you enjoyed it, but I'll catch you all in the next one.